I'll ask you some questions. Top tax rate today, do you know what it is?
No.
37%. What's the highest the tax rate has ever been in American history?
It's been north of 80, hasn't it? At one
It
point?
was, yep, it was in 1944, coming out of World War II. World War II debt, we need to start paying down 94%. You got to a point where the federal government took 94 cents of every dollar you earned. 1963, so almost 20 years later, it had dropped to 91%.
Fantastic. You get 9 cents on the
So
dollar.
right, you get to a point and they're only taking, by the way, that's the federal government. It doesn't include the state. We are in roughly the lowest income tax bracket system that we've seen in 50, 80 years, maybe close to 100 years of American history at this stage. And there are many families who fall in that 22, 24% bracket on an adjusted gross income. And one of our points of counsel for clients is if you're in that 22 to 24% bracket, you really should be thinking about Roth 401k contributions, not pre-tax 401k. Because surprise, your tax bracket's not going to change a whole lot when you retire. As your wealth grows and then you move into financial independence, your tax bracket's not going to change all that much. In fact, history would say tax brackets will trend up from here, not down. And if you doubt what I'm saying on that at all, look at what interest rates have done in the last 2 years. 2 years ago, a 30-year mortgage was 3.1%. We have clients that have 2.75% 30-year mortgages. Today, those same mortgages are 6.8, 7, 7.2%. So lest we think that that what we're living in today with regard to tax rates will somehow magically perpetuate into the future. History doesn't repeat itself, but it rhymes.
Mm-hmm.
And, in higher interest rates, higher tax rates, because higher interest rates cause the interest on the federal debt, which, by the way, is at all-time highs, to go up. Means the federal government has to raise more funds. How do they do that? They raise revenue sources. Where do they do that? They raise tax.
I hear you saying pay the taxes now at a lower rate and grow all that.
Yeah, so we regularly use Roth IRAs, Roth 401ks, 529 plans, healthcare savings accounts. Any of those vehicles are fantastic. We call them wealth acceleration tools because it allows money to get deferred and to be growing on a tax-deferred or tax-free basis.